All righty. Hello. We are here for the 2 o'clock live that is now happening at 4 o'clock, or actually 4:15. I was otherwise occupied at 2 o'clock, but I wanted to make sure I still was present and showed up to the live that I said I was going to do. I'm a woman of my word, so I wanted to keep my word. So here we are. I believe I'm live in a few places, maybe not there yet. Let's see. I'm hoping this is going to allow me to be live in all the places at the same time. Yeah, here we go. So, I said I was going to come on live today to talk about option shares versus options. Shares, not option shares. Shares versus options. I said I was going to talk about shares versus options. Alrighty. So I wanted to do that. Let me make sure that we're on in all the places. So all the people know that we are live. Hello, young Wheezy. Hey, welcome for joining. Welcome to our call. Thanks for joining. While I wait for people to come on, y'all subscribe to the channel. Make sure that you get my notifications in the future. We'll be on time at 2 o'clock. Today I was busy doing something else, and I felt like it was a priority at the time. So I'm here. Not that I was minimizing your time. I'm just saying I had to make a decision, and the decision included me doing what I was doing and being in the moment, being present in the moment, so that I could come, and then when I'm here with you, I could be present with you. All righty. So we did a bunch yesterday talking about selling options. I wanted to be sure that we know that I am Arlissa Pinkelton, educator to trader. I am an option sellers coach. Many people don't know about option selling. They really know about buying options, but I coach sellers. Somebody has to sell them, right? So I coach the sellers on the strategies that we use as options sellers. We have a whole community. Educator to Trader is our community. You can find me in all the places under Educator to Trader on Instagram and on TikTok and Facebook. We have a Facebook group that is free to join. If you'd like to join the Facebook group, it's under Educator to Trader in the group. So go ahead and find us. Send out a request to join, and I'll make sure that you get involved in our group. We also have a membership where we do phone calls in the morning, like pre-market calls, and we do coaching on the weekends. This coming Saturday, we're doing some coaching on SPX credit spreads is what we're doing this weekend. That's one of the things we're going to coach on this weekend. We have a 411 training for newbies, for those who are newer to the option space. We do a live training once a week. Actually, it's twice a week. We do that to get newbies up and running with the seller strategy. So we got a few things going on, a few resources that would help you to grow as a trader if you're interested in that. But let's go on with our topic for today. Topic for today is option selling. My brain is all over. My topic today is shares versus options. There we go. My topic is shares versus options. Many times when we're learning things about the stock market, really what you hear and you learn about is trading shares or buying shares, not even trading. Most people are just buying shares, right? When you're buying shares, you are buying a part of the company, and you buy them one by one. You buy 1 share of Apple, 2 shares of Apple, 4 shares of Apple, 100 shares of Apple. Most brokerages let you buy them in whole numbers, but there are some like Robinhood, I think that Webull might, and then maybe a couple of others that allow you to buy them in partial shares. So like with Robinhood, you can say you want to spend $100 on Apple stock, and they'll buy whatever portion that is. That may be, actually Apple stocks is about $175. So that's not even a full share, but you can buy it in the dollar amount versus share amount. Things like Thinkorswim, though, brokers like Thinkorswim, they do it only by the 1 share, 2 share, 3 share. You don't do partials with them. So I do like that Robinhood allows you to buy partial shares, and you can do it with your money. And then when you do like dividends, if you have a dividend stock, you're going to be paid dividends based on the amount of shares you have. So if you have 4.5 shares of something, then you're going to be paid dividends based on 4.5 shares. Yeah, I think that's wonderful. That I know it's Robinhood, and I think it's Webull. I'm not sure about the second one, but I do know Robinhood lets you do partial shares. But when you're buying shares one at a time, right? And when you're buying a share, your desire is that shares would go up. Your desire is that the share would increase in value. You buy it for $10, you want it to go up to 12, 15, 100, whatever that happens to be. You buy it for $100, you want it to go up to 150, 180. You want shares to go up. So when you're buying shares, you are actually purchasing a part of the company. Shares are an asset. Shares are an asset. Shares of a company is an asset. And depending on what kind of the number of shares you have in your portfolio, those things can actually be used as security for other things. If you want to, buy a house or something, and you've got $100,000 worth of stock somewhere, you can use your stock as the underwriting tool to purchase more things. It's an asset. Shares of stock is an asset, right? You're buying something. You're owning a share. You own those. The difference between those and options is when you're buying an option, what you're buying is the piece of paper, right? And even it's not even paper now. It used to be paper. Now it's just an electronic thing. You're buying an electronic piece of paper that gives you the right to buy or sell 100 shares at this particular price. It's called a strike price. That's called a strike price. So when you're doing an option, you're basically buying or selling the right to do something. You don't own the asset, right? There's a difference between shares. You actually own a part of the company. Option says you got a piece of paper that gives you the right to buy or sell at this particular spot called a strike price. When you have shares, your shares don't ever expire. When you own them forever. As long as the company is in business and has shares, then you're a part owner of the company. There's no expiration on that. But if you're working with options, your options have an expiration date. Some of them have weekly expirations. Many of them now have weekly expirations. Some of them have monthly expirations, right? They only have monthly. All of them have monthly, but some of them only have monthly. Some companies don't even have options yet. Maybe they're new or maybe they're small. They don't even have options. But options have expiration dates. So you can expire this Friday. You can expire next Friday. You can buy or sell options out to whatever date there is an expiration date to get. Some people buy what's called leaps. This is long-term equity positions. They buy those, and the leap is 6 months plus is the expiration. So if you're buying now in June and you're buying a call option or selling a call option, I guess buying would be leaps. You're selling it for January of 2024. Those are called leaps, long-term things. You're basically on a call. You bought a call or bought a put with the thought that it's going to go up or down over a longer period of time, or you're willing to ride with it over that longer period of time. When you're buying an option, right? You're saying you buy a call option. You're saying I've got the right to buy these shares at this price if the stock passes this price. So let's say you have a 100 strike option. Let's say I'm going to go with Amazon. And the price of Amazon goes past 100. Let's say it's at 105 or 110. Then you have the right, doesn't have to be 100, it could be 101. You have the right to buy 100 shares at the 100 strike price, because that is what your electronic paper option says, that you have the right to buy shares at this price if the stock has passed this price. So then basically you're saying that, okay, the stock has passed the price of 100, maybe it's at 105, but you're buying it for $100. So for $100 share, $100 per share, and you're buying 100 of them, right? But they're worth $105. So you're automatically in the money. You're buying, something that is worth more, but you're buying it for less. It's almost like wholesaling, right? That kind of goes with wholesaling. If you buy a vehicle that's worth $20,000, but you only pay $10,000, or buying a house that's worth $200,000, but you only pay $100,000, you have an option to buy it for $100,000, and it passes that value by the expiration date. You have the right to say, I have a piece of paper, this options contract that will allow me to buy it at this $100 price. And you can exercise that option when that option contract gets in the money. And I know I'm talking some terminology that you may or may not know, because sometimes we have options for beginners, which is what I teach, options for beginners. And for newbies who are learning the terminology, and listen, options is a whole education. It's not an impossible education, but it does require time and energy to learn options. If anybody tells you, oh, you can learn this in no time, they're not telling you the truth. I'm not going to say they're lying. When I was little, my daddy would never let us say lie. Did y'all ever have that situation when you were young that your parents didn't let you say you lying? It's like lying was a cuss word. You couldn't say you lying because that meant you was cussing, even though you weren't. Anyway, I'm not going to say you lying. The person is lying. But if they tell you you can get option and it won't take you no time to learn it, they're not being truthful with you. It takes a little bit of time. It's not a long time. It really depends on how fast you accumulate knowledge and what you're trying to study on. Because you're trying to learn all of options, it's going to take you a long time. But if you pick some strategies and narrow it down, it definitely shortens the lead time on the learning. It shortens that learning curve a bit for you. Okay, shares. You're buying shares as an asset, right? You're owning a part of the company. You're an owner when you have shares. You can buy them. You can sell them. There's something else as a seller strategy called shorting. Shorting is where you're hedging your position. Maybe you also have a long call option, but the price is not doing what you want it to do. You could actually short the shares short term or long term if you want. Which shorting is basically where you borrow shares from the broker and you at one price, and then you plan to sell them back at a lower price, and the difference is your money. I won't talk more about that at this point because that's going to be a whole different 2:00 live, because shorting is a whole strategy, right? Shorting shares. Anybody who's watched the movie The Big Short, which you all should watch that movie. It's really good. It's a kind of stock market movie. But yeah, you might want to check that out. Right? So shares, you're owning, and I know I'm repeating things because I'm an educator. That's what I do. Repeat things because repetition is the mother of learning. Shares means you're owning it. You buy them one by one. They're an asset. If you use Robinhood or some of the other brokers, you can buy them in partial shares. But then you can have options where you have the right to buy or sell. If you have the right to buy or sell at a certain price, that's what you use options for. Trying to make sure, hey everybody. See a couple people coming into the comments. Hi y'all. I hope this is live on YouTube. It shows on my screen that it's streaming on YouTube. I hope it is streaming there appropriately. Options, you got the right to buy or sell at a certain price. The right or the obligation, because if you're selling options, let's talk about this real quick. If you're selling options, you're obligating yourself to either sell or, to sell as far as shares or to buy shares. If you're selling a call, you're obligating yourself to relinquish 100 shares at a certain strike price. And if you're selling a put, you're saying if the price gets down to this price, I'm obligating myself to buy. This is your obligation. But the contract has an expiration and you can open and close them as you see fit. So if you are in a trade and it's doing what you want it to do, and all you want is the money versus the shares that we're just talking about, you could buy the 100 shares. You could just close the option trade, take the money, the profit that you have, and walk away. If you're selling, you can do the same thing. But if you get to expiration, if you let the trade go, and if you're selling and you get to expiration and the trade has not done what you wanted it to do, then the broker will basically, I won't say force, but force. The broker will force you to do what you said you would do. So if you're selling a covered call, or you're selling a call and you're saying, I'm willing to sell 100 shares at $10, and the price gets above $10, the broker is going to exercise that and say, okay, now let's do what you said you were going to do. You said you were going to sell 100 shares at $10 a share. And now somebody wants, somebody has placed a call to say, yep, I want the 100 shares at $10. So ante up. Ante up. So either you need to have your money out there ready to buy 100 shares, or you need to have 100 shares that will be released. Hey, Claudia, you have to have 100 shares that will be released back to the person who said that they were exercising their option to buy. Then you need to respond to your obligation to sell. If you're selling a put and the price gets down below what your strike price was, you said, I will sell a put at the 4 strike or the 10 strike. Let's use $10. It's still a good price to be. And the price gets below that $10 and you're at expiration, then that's going to be exercised or assigned. I think assigned happens at the bottom. Exercise happens at the top. You're going to be assigned. You're going to be assigned those shares. You said, if your contract said, I'm willing to buy them, at $10 a share if I was selling a put. And if you get to expiration and the price is less than $10, somebody on the other side is going to say, yep, you said you would buy them for this price. So here you go. Ante up the money. Here's your 100 shares. Ante up the money. Difference between selling shares, buying and selling shares, and buying and selling options. Shares is a part of the company. You own it. You can buy and sell them whenever you want, right? Hey, you can buy and sell them whenever you want. I personally believe you should work these two things in conjunction. Some people only do shares. They don't do options at all, which is fine. I think if you're going to do shares, you at least do shares, right? If you're going to do options, then do them. But I think you should do them in conjunction. That even if you are doing options and you're selling options or buying options and you're making profits, use some of those profits to buy shares, because then you are purchasing an asset. You're using your profits to purchase assets, right? Just like we use our money that we work for to buy houses, to buy Airbnbs, to buy whatever other asset you'd like to buy. Houses. I said houses already. Buy houses, then buy more houses. Yeah, that's an asset. Just like we use our resources to buy houses and other assets, use the money you make off of options to buy shares. That's an asset. Shares is an asset. And the two strategies can be combined, right? If you're buying just shares, which is great. If you're somebody who doesn't want to get into the world of options, listen, nobody's judging here, because options can be a lot on your mind. I'm telling you, the terminology and all that goes included with options, and sometimes it can work a toll on your nervous system. Listen, anybody who trades options will tell you I'm not lying, even though you're not supposed to say lie. I'm a big girl now. I can say lie if I want to. My daddy, you on there? If my daddy here, he would tell me not to do that. But use your results or use the option money to buy shares. If you're going to just do shares, though, I would suggest you find you some you like, right? Find a stock you like, and hopefully it'll be a stock that is continuing to grow over time. Apple comes to mind. I'm not a financial planner. I'm not suggesting anybody buy anything or sell anything. Okay, please don't put me in the line for any fire for that. I'm saying Apple seems to be a good thing that continues to go up, right? Not saying anybody need to rush out, but it wouldn't be a bad investment. But I'm just saying I'm not giving any financial advice. but Apple's a good thing to get. Wink, wink. I always see what's her name? King Ashley Ann always says wink, wink. See, wink, wink. So use them and buy some shares, and maybe buy, I think Apple is a dividend share, but buy shares that have dividends, because dividends basically is, as long as you own the shares, they give you like dividend money. There's a whole list of groups called Dividend Kings, and there's some other few lists, but they give dividend. Basically, they give you money for owning their shares, for being a partial owner of their company. They give you money for just holding their shares. That's a good thing. I'm a big fan of REITs, REITs. I think there's a young lady, Ashley Fox, on Instagram who's always talking about REITs. Basically, that's a way to invest in real estate without buying a house. But you're investing in REITs, which is Real Estate Investment Trust, I believe is what REIT stands for, REIT. And that's, again, dividends, because REITs, the very nature of a REIT is that they have to give a majority of the money back to the stockholders or back to the REIT holders. That's a way for you to invest in real estate without buying anything. And you get dividends for buying them. They don't necessarily go up and up. They're not necessarily growth. That's not their intention. REITs are not intended to grow. They're really real estate. They're like a trust. And that's what the word is, real estate investment trust. Their job is to pay their stockholders and hold steady, provide real estate for the companies who are in the REIT, and so on and so forth. All righty. I've covered shares. I've covered options, right? Just know that my community, we do teach options. I teach options to sellers. We teach multiple strategies from the seller side, because I'm a seller coach, an option seller coach. You can find me, like I said, on YouTube, which is here, I guess. You can find me on Instagram and TikTok. Every now and then I do some TikTok videos. You can find me on Facebook. We have a Facebook group. Feel free to come join us. I have a membership. The membership is a paid membership. If you go to my website, Educator2Trader.com, you really can see all the things that we have, all of the courses that are available to you for trainings. And you can hook up with the membership there if you'd like. I do offer, what I want to talk about real quick before I go is the Options 411 boot camp. It's a 2-day boot camp. It really is a deeper dive and a more broad shaped introduction to options. The next one is taking place on July 18th and 19th. It's running along the bottom of the ticker. 18th and 19th, it's running. You can go to my website, Educator2Trader, and get registered for that if you'd like. And that leads into a 4-week live coaching or live training situation where we go deep into option selling. It's where we go into option selling much deeper, a lot more closer hand hold. I won't call it hand holding because nobody really needs hand holding. You just need a little more closely monitored training. Yeah, so we set up our accounts. We get up and running. We learn how to chart, all the foundational things that you need. That when I learned all those things under a program that was quite expensive, but I learned it. My program isn't as expensive, but I feel like there's some things that you need foundationally in order to trade options, and charting is one of them. I think I have a YouTube video on charting too. So if you want to know more about how to chart and why to chart, because charting is the foundation of all of this. Anything you're doing, shares or options, you need to learn how to chart support and resistance and those kind of things. You need that. If you're trying to trade options without some charting, you can be successful a little bit, but I'm telling you, those charts are of utmost importance. And if you're not sure how to do that, then either check a video, check me out, and we'll make sure that we get you covered on how to chart, because that's important. All righty. We will do this every day at 2:00 live. I missed us today. I was a little late today, but we will be back. If you haven't subscribed to the channel, please do so. Of course, it helps the channel to grow, and it helps you to get indications of when we're going to be on live. Okay, when we're going to put out videos. I try to post content every single day on my YouTube channel, content of value, not just content for content's sake, but I try to post content of value. All righty, I think I've covered. If we don't have any questions, as they say, all hearts and minds clear. I hope this has been value to you. Hope this has provided some value. Look me up on Facebook if you want to send me a message. I generally respond to those in a timely fashion. Alrighty. I'll see you all in YouTube world, in social media world, and see you tomorrow at 2 o'clock. Bye, everyone.